When considering an investment in a situation like this, it's very important to figure out the investment dynamics. What is your upside and what is your downside potential? The source of upside potential is the pent-up demand from all the investors who like the stock's valuation and wait for the overhang to be over so they can buy shares without the risk that the stock may go down if dilution is too high. The source of downside is the dilution, which may cause investors to sell based on the updated valuation of the stock. There is also a lot of fear of a failed follow-on offering. Even though a warrant exercise is not technically a follow-on offering, it's pretty similar in the sense that the company is issuing new stock to the public for a price and it's raising capital. Such an offering is considered a failure if the stock subsequently trades below the price of the offering. The failure can cause some investors to sell their shares in order to cut their losses short, or perhaps because they think that they may have made a mistake in their assessment of the stock's value. The result is that the stock can go down further, often more than deservedly so, which can create a buying opportunity. As a rule of thumb, it's generally a good idea to wait 1 to 2 weeks after a failed offering before buying in, because it takes some time for all the weak hands to be shaken off their holdings, and when they do so, the stock price goes down and you can buy it cheaper. In order to figure out how to invest in a stock overhang event, you want to figure out the probability of a significant dilution. For a stock overhang caused by a large amount of warrants outstanding, you want to buy the stock 1 or 2 days before the expiration of the warrants if you don't think that a lot of the warrants are going to be exercised. If you don't have a good sense of what's going to happen, or if you think that a lot of warrants are going to get exercised, causing dilution that can result in a failure of the exercise and potentially much lower prices, it's better to wait until right after the warrant expires. There is a good chance that the stock price will have momentum along its initial direction, so the market will tell you what happened and how the new supply of shares is going to be digested. If the stock goes down, there may be some more selling pressure to go through in the next few days or couple of weeks. Whereas if the stock goes up, it will probably rally for a few more days as investors regain confidence in the stock, and the investors that were waiting on the sidelines keep building their positions. The probability of whether an investor will exercise his warrants or not depends largely on the valuation of the company, its stock price, and the use of proceeds. The valuation is probably more subjective and murky in these situations, but you can tell that if the stock price is below the exercise price, the warrants have a low probability of getting exercised, and if the company is planning on using the proceeds from the warrants to do something dilutive, then probably not many warrants are going to exercise, because their holders will be afraid of a failure of the capital raise, which may cause them to sell at lower prices to control their losses. Below is a short list of some SPAC warrants with expirations in the next couple of years. In general, stock overhangs are a very interesting instance of event-driven investing, and SPAC warrants are one instance of stock overhangs that you can monitor in the future. This presentation is for educational purposes only and is not investment advice. Before making an investment decision, contact your financial advisor.